I didn't tell you, I got a fancy dinner tonight. I'm like, oh yeah, I'm excited. I'm just saying, I got excited. I got a fancy dinner. I got a gift card.
Cell Rock?
No, Ocean Prime.
Oh, Ocean Prime.
It was a rather high dollar gift card too.
That's gonna be a great one.
I've never been.
I've never been.
Can you drink $200 worth of stuff?
There, you probably could pretty quickly.
I haven't been out in a while, so I'm going to go to town. That might be a topic for the show. What happened to Dustin? Hey, welcome to the Closing Beat, everybody. Happy Tuesday. It's not Monday, it's Tuesday. How you doing out there today? Welcome to our show. So we do this every day. We call it the Closing Beat because it kind of relates to our name and, the stock market. But just to try to teach you something new, talk about the stock market. We really don't care day to day what the market does. We're long-term investors, but it's just a nice way to show you that we're here. I try to teach a new lesson. We are very much a teaching advisory group, and if you want to check us out at jazzwealth.com, I appreciate it. And thank you to everyone who has joined us. We haven't been open for new clients in some time, and you guys are keeping Eric busy, so I really appreciate it. I know we're a small fish in a big pond, and we'll always be a small fish in a big pond, but I really appreciate it. So we've got a lot of new things that we're going to do for you, and also publicly, so you guys can keep learning. But for the moment, we're here to talk about the stock market, how things are going. Oh, our Wine and Wealth last week was open house. If you want to see kind of how we do things for clients, read through a lot of good stuff. It's on YouTube, and it's up. It was at like 7:30 last Thursday. So check it out if you're interested to see how things work. Every week we do that class. This week, we're actually going to be talking about new positions and how we're using some of our cash, because many of you know that we build our own funds here. And so we didn't participate 23% to the downside in the stock market because we had about 30% in cash, a little bit more. And we had that since last year, the end of last year. And so now we're actually looking to use that cash. Well, this Thursday, I'm going to share with you guys how are we going about that? What changes are we making to your accounts, those of you that are here with us? And I'm so excited about that, man, because if we were falling the same as the market, you just know people would be like, oh my God, what are we going to do? This is crazy. Only had one person so far. There's always one. We only had one person say, I think things are going to get a whole lot worse. I'd rather be on the sidelines, and I reluctantly agreed because that's what they wanted to do. The odds are stacked against them. They know that, but that's what they wanted to do. Anyways, let's look at the stock market. Off to the right-hand side of your page, we start off Tuesday a whole lot better than last Monday. Remember, last Monday we were down like 3%. And so this week, the S&P anyways, up about 2.5%. I'm getting better. Been sort of under the weather, finally getting a little bit better there. Anyway, so it's a different way to start things. Now, remember, and I'm going to share with you in a second, the stock market outperforms itself in bear markets. So that sounds a little weird. That's, not normally something you would mention, or it sounds a little odd to say, but we're going to talk about that. And also today, our FinTips video, I talked about don't rebalance during volatile periods. I show you exactly why that's a big mistake. Rebalancing is great, but exactly why not to do it during volatile periods. You wait till those periods are over, and then things start to calm down. That's when you rebalance, right? Anyways, we had existing home sales came out today. It's better than expected, but still down overall. If you look at Redfin, you can look at a lot of data there. Zillow, I believe, still has the data there. We have prices falling. We have price cuts rising. And so despite what Dave Ramsey says, the home prices are coming down across the United States. And then just for fun, I went through some of the regional areas to see price cuts rising and median price sale starting to turn over a little bit. I don't think it's a big deal. I think many people would welcome an actual pullback there. And, that's, like it or not, that's what's actually happening. If we look at the S&P here, we've now had back-to-back weeks of 5% losses. Is that a big deal? Does it matter, right? We lost just over, here, I'll show you. Let's go over here. So Yeah, there you go. We lost 5.05%, and then we lost 5.79%. It's actually kind of rare to see that happen. Visually, if I could just show you on a chart of the S&P where that's happened, the little orange dots in the background there. Oh, maybe next time we go with red. Right, maybe red or green or something a little more obvious. But here is the actual days of those back-to-back drops of 5% or more. So if you're looking back here, there's only 7 other times in history. You got 1974. That was during the Nixon resignation. That was a big deal politically. You got 1987 going into Black Monday there. 1998. If we go over here, this is where Russia defaulted on their debt, but more importantly, long-term capital management. If you've never read the story of long-term capital management, it is where the phrase picking up pennies in front of a steamroller comes into play. Really fascinating story. There are numerous books written about them, but anyways, I didn't mean to get off track there. Long-term capital management there, that's in this 1998 period here. 2002, that's the end of the dot-com bust there. You got 2008 during the financial crisis. You had 2 times over here, and then you had COVID, of course, the last time that's happened. Very rare. What I want you to notice is these aren't just like magically placed to make it look good. These are the exact days that this was placed. Were we near a top or bottom in the market? Maybe a couple years before we hit a top there. We got a bottom here within a few months of a new bottom, almost perfectly at the bottom, COVID bottom, right? And so you see that for the most part, performance, number one, you see for the most part that what we just had happen, the last 2 weeks of a pullback, is akin with the worst periods in the U.S. stock market history. So you're living right now through what is historically some of the worst times that we've ever seen. So congratulations to you if you haven't freaked out yet. There was only one time, by the way, that there were 3 weeks in a row that we lost 5%, and that was leading up to the Black Monday, where the market just died all in one day. Other than that, it's never happened any other time there. Now, if this history is to repeat itself, even in some way, then it would be easy to suggest that right now is a good buying opportunity. So starting last week where I was saying, hey, now's the time, right? You want to start buying in this zone here. You want to go and be more aggressive with your buys. Well, we can look back in history and see any back-to-back losses of 5% was closer to a market bottom than a market top. So really fascinating there if you want to take a look at that. That doesn't mean we can't have a recession, by the way. We can most 100% have a recession. But remember, most of the time when we hit a recession, the stock market is over 2/3 of the way through its downturn. Last week's open house wine and wealth, actually, I shared that with you there. So anyways, here are the actual performances of those that I just showed on the previous charts here. 1974 during the Nixon resignation there, down 6% 1 week, down 5.4% the next week after that. You've got the same going here. You can just see they're all over 5% because that's the data that we were actually referencing there. Now, when I say that the stock market outperforms itself, these are the time periods you have to be in the stock market or you can't have S&P level returns. You have to be in during those nasty snapbacks like we saw 2 weeks ago, 6.6%, all in 5 days. You've got to be a part of that, even if we make new lows. Otherwise, you can't outperform the S&P. And so everybody's, you can't outperform the S&P. You absolutely can, but you can't do it if you're not participating in what happens or what becomes these outperforming weeks. In other words, let's take a look. Here's the average performance going forward over 1 month, 3 months, 6 months, and 1 year. So the blue is after having 5% back-to-back weekly declines there. So we took the average of all of them. And you could see that compared to any normal 1 month performance in the S&P, it gains 0.65%. So we way outperform the normal historical trending of the S&P 500. Take any 1 month, add them all up, and then take the average of the entire, since 1945, which is as far back as we can go. You take all of that and average it out. You say in 1 month, the S&P averages a gain of 0.65%. After periods of 2 weeks where you have loss of 5%, the 1 month forward performance dwarfs that of the average. In other words, the market outperforms its historical average there. So if we look 3 months out, the average 3-month gain across the entire S&P in any 3-month time period is 2.13%. We're more than double that over when we have these back-to-back declines. Look at how that gets worse and worse, and I should say better and better over 6 months and 1 year. So the long-term investor gets rewarded by outperformance of the S&P when you're able to sit through some of the nastiness that we've seen right now, and in fact some of the extreme nastiness that you see in the stock market. So no matter what you think, that's why I pointed out it was the Nixon resignation, it was Black Monday, the end of the dot-com bust. I pointed that stuff out to show you that this time is certainly no different. They're calling this the 60-40 collapse, where whether you had 60-40 stocks and bonds, either way, you took a big hit there because bonds actually fell as well. But anyways, this corresponds with the worst times in history. And no, this time is not any different. There is no news or political adversary or whatever you want to say that makes this time any different than all the other times in history. That's why I pointed out there was some really nasty stuff going on during those time periods there. Anyways, that was a long way of basically explaining what's kind of a really cool stat if you're looking at some of the worst periods of time in history. So hope you learned something there. If you're looking at the S&P, remember last time we put in a little bit of a bottom in the short term. That was 6.6% to the upside there. We were talking about the move back towards the 50-day moving average. You expect the same thing to be making its way now, whether it happens all in one fell swoop or if it jitters around a little bit, doesn't matter. You expect the market to retrace some of its oversold current position, right, where it stands. Now, if you're looking in the S&P here today, it really didn't matter where you were looking. The growth stocks were large cap growth stocks were where all the action was, but you could also say just anything large cap was the strongest out of the group today. I'll point out some of the obvious ones. Apple getting a little retracement there. Microsoft up another 2%, 2.5%. Amazon, which has been a little sluggish compared to the others, seeing a nice little bounce. Tesla about 10% on the day. Now go outside of that and look at some of the consumer staples. Remember, the Amazon Prime Day coming up here. So consumer staples are going to be the focus. How do they handle margins through the Amazon Prime Day? Walmart up 3% on the day. Procter & Gamble also 3% and very, very much oversold. Coca-Cola all getting a nice little boost into this summertime shopping season and hoping to prove that they can handle the margin pressures. Visa, which has been a hot mess lately. Nice little rally today. MasterCard, nice rally. Any of the financials, Citigroup, these are not amazing charts right now, but Citigroup, JP Morgan, Bank of America, all nice 1 days, but again, very oversold. So is this people dipping their toes into the water a little bit? We'll see what happens. I'll use the IWM to show the Russell 2000 because that was one of the better performing areas as well. Small cap index is what it's referred to. But also small cap growth stocks did well, small cap value stock, basically everything across the board. Mid cap did well, also just nice little recovery and a little bit of a breather from all the nastiness we've seen lately. The NASDAQ performed the best as far as performance on the day, just barely. You got the NASDAQ up 2.52%, very extended, and the same comments would be held true for retracement of an oversold decline. Oil. So oil, this is typically the start of the season where we see drawdowns in oil, so be aware of that. Maybe there's a gas tax holiday coming up from Biden. I don't know, like historically gas tax holidays did not help gas prices go down, but usually the gas holiday is not very long, so it's not fair to pick on them for making that decision, but we'll see what happens. I'll take a gas tax holiday. We're going to pay for it anyways. So oil off the 50-day moving average, nice and strong there. Anything energy related today was all solid green. ExxonMobil says, hey man, let's work together. Let's not fight about this whole thing going forward with these gas prices. Don't blame us. We're willing to get to work, but you're kind of cramping our style here, right? ConocoPhillips higher on the day as well. These are all oversold declines. If you look at these XLE, the XLE from my birthday to last Friday, which is not a long time, by the way, you already have a 20% decline. Yeah, 20% there in 8 days. So there's only two other times in history. It was 2020 and 2008 where we've fallen 20% in 8 days. And the forward performance is basically mixed, right? So although it's positive, you it's not viable positive, right? It's just a choppy, hot mess is what you would expect from energy going forward here. Nonetheless, today, they were all very, very strong. We'll cover a few of those in our notes coming up here. What else? What else do we got? Sector-wise, here we go. Well, we talked about energy already. It was the best performer today. Consumer discretionary. There you go. Up 2% on the day. Every sector was positive on the day. Communication services was the weakest out of the group, only up 0.71%. Other than that, utilities, real estate, industrials, financials, all up more than 1%. And consumer staples, you don't have to guess anymore. We just pointed out a bunch of them. They had a great day as well. Remember, there are 11 sectors in the S&P 500. So on a daily basis, I'll start with the stock market as a whole. How did it do? And then what made up the performance of the index? Was it one area of the market that did well? Well, in today's case, it was every single sector was higher. In other words, we could say it was a broad rally. People weren't being choosy about only going in financials or energy or whatever, a little more energy than others, but it was broad. People basically said, I want in the entire market today. I want to take a shot. And so oftentimes I'll go through the individual sectors just to break down what may have been leading the way today. And it was, in fact, everything. 0 new highs on the day, 14 new lows. I don't have a lot of great stuff to point out. I was trying to find the extended stuff. There's only 14 new lows. WestRock is one of them. Baxter is another. These are the leftover stocks that are still just really extended in the short term there. Bath and Body Works. There we go. It's not great. It did finish lower on the day by about 10%, starting from a positive position, just sold off rather aggressively. That stands out as odd. Home Depot stands out as odd as well because there weren't really a whole lot of weak stocks in the S&P. Home Depot was one of them. And DaVita is news-driven, down 15%. They lost a Supreme Court ruling there. Kind of a really interesting Supreme Court ruling on end-stage renal disease if you're into that kind of stuff. My wife is into that, so I just happen to pay attention. But that was news-driven. All right, stocks in the news, then I'll take your questions here. Mondelez, you know Mondelez. They do Oreos. I actually happen to have an entire bag of double stuffed Oreos over that. There may be 2 or 3 left. But anyways, they're in the news because they bought Cliff Bar and Luna and the Cliff Bar kids for $3 billion. You know the story of Cliff Bar? So 20% is owned by the employees, so congratulations if you work for them. And then 80% is owned by 2 people. This is really like a grassroots kind of a story there from a guy that was just out hiking one day and was like, you know what, I can't find anything I want to eat on my hike. And that spawned like a 30-year business that now has made him very close to a billionaire there. So very interesting. In 2000, by the way, I remember this just because I thought it was fascinating as a kid. In 2000, Quaker Oats, you know, that make the oatmeal and stuff, they offered to buy Cliff Bar for $120 million. And I remember thinking at the time, just watching the documentary of that guy, thinking, yeah, all right, you got a deal. I would have sold. But he held out, got a $3 billion, man. So really fascinating there. And also a royalty. So not only did did they sell the company for $3 billion, but they said, hey, going forward, we want a piece of your sales as you grow. And Mondelez agreed to that, man. That's a heck of a deal for a guy that you'd probably walk by you in 7-Eleven with no shoes on. You wouldn't think anything of it. Hey, got about $1 billion. Good for him. Speaking of big deals, JetBlue. So JetBlue desperately wants Spirit Airlines. They say, tell you what, we'll now go all cash for our offer there in an effort to try to beat out Frontier. They're going to go $33.50 a share for Spirit Airlines, which is ticker symbol SAVE. So we're trading at like let's call it $23 at the moment. They said, we'll pay you $33.50 and we will pay $350 now if the deal doesn't go through. So they'll just give Spirit Airlines $350 if for whatever reason, any reason, the deal doesn't go through. That's up from like $250. I think they threw another $100 million in there. They're also willing to get rid of some of their assets, which would be Spirit's like New York assets, to make the deal go through. Because American Airlines is already showing us right now that might be a regulatory issue there. Kellogg's in the news today. Was up a whole lot more. Kellogg's will now be 3 different companies: the cereals, what's the other one there? The plant-based stuff, and snacks, I think. So breaking into three companies. The transaction, by the way, why would they do this? Why would they break into three companies? It's kind of like Bath and Body Works and Victoria's Secret. There's money to be had, more money, by splitting the companies apart. And also, the big one, it's a tax-free transaction. So they get to split into three companies, let those three companies grow, and it's tax-free. Yay. Let's see if Biden has something to say about that, because I think he will. Diamondback Energy, speaking of giving money to people, up 8% on the day. Diamondback Energy says our base dividend for the year is going to be at least $3. The goal is to return 75% of their free cash flow to investors. They've decided not to go like every other oil company. Let's not go explore more, spend money on capital expenditures. Let's just give money back to shareholders, because it's too tough to go out there right now. So they're all arguing the same thing. What do you want? You want us to go drill for more oil, move more oil, and refine more oil, and do all of this, but then you shut us down and you tell everybody on TV you hate fossil fuels. And so there's a little disconnect right now. Tesla is laying off about 3.5% of its workforce, I believe. I believe it was 3.5%. Other than that, tomorrow you've got 1, 2, 3, 4 Fed members speaking tomorrow. That is likely to continue up until the next blackout period there. 1, 2, 3, 4, yeah, you got 4 Fed members speaking. And then you got earnings from Winnebago, KB Homes, and that's pretty much it for tomorrow. Yeah. I will take your questions now if you happen to have any for me. I bet you do. Let's see what's going on out there. Yeah, you think tomorrow's down? So that's it. Just one day and then tomorrow just going to fall apart, huh? It would have been very easy today to see the stock market up 2.5% and then finish zero or finish negative on the day. We've seen that, right? And we've also seen the ability for the market to retrace all of its gains all in one day after. So that is a possibility. Yep. Waiting for Amazon to go down. I don't blame you on waiting on Amazon. Why is it not bouncing with everything else? Like, I mean, it was a little bit, but why is it struggling more than all the other mega cap stocks there? I think that's a little bit of a warning sign. You think General Mills follows the same plan as Kellogg's? They could. I know they want to get more into the pet space and everything, so maybe that helps them spread out. They just don't have a lot of brands right now. So maybe a few acquisitions and then do it. Yeah. I saw that. Meta, or Facebook, chose not to participate today at all. Pretty much throughout the whole day there. It did not participate there. I think the housing issue is now behind them. Remember, you used to be able to sort by someone's housing status, which was claimed to be discriminatory. And of course, it's Facebook's fault because they let you do that. I think that's over. I think they ponied up the dough, and that's the end of that one. Yeah. Revlon is not Hertz, by the way. I see what's going on there. Hey, company files for Chapter 11 reorganization. It's up 60%. What are we doing? That's not going to end the same way. But hey, you can take a shot, I guess. Yeah. Yeah. Buy on the way down. Bottom back up. 20% discount. Too good to pass up. There you go. First thing business cuts back on is advertising. Yeah, and there's going to be a recession, right? Does anybody not think we're going to label this as a recession? I don't think so. The food sector's just been a little bit hot lately because of everything going on there, especially with Kellogg and Mondelez today. Wow. No new drink and snack recommendations. I've been drinking the healthy stuff, like the Natalie's, like kale and zinc and all that stuff. I'm trying to get over this thing. I mean, I had a soda too, but yeah, no snack recommend. I still do have the Old Bay. If you haven't tried these things, Old Bay goldfish, they're still there. That's how good they are. I have not eaten any of them. I did not really like them, but you can try them. Yeah. What do you think of Blackstone as a buy? So Blackstone, not only the campus communities, but they're looking to continue buying. So they're in full-on acquisition mode there. So I don't have anything for you like at the moment, but it would seem that that's something you got to be a part of. Financials as well. How'd you know I have Airhead gummies? I do. So what happens is I go buy a soda across the street. I don't want to swipe my card for 85 cents. I end up buying something else. Airhead gummies. You're laughing at. Yeah. Anyways, we will see what tomorrow has in store for us, right? Anyways, we'll be back, of course, tomorrow to do this all over again. I got a fancy dinner tonight. Got a gift card for my birthday, and the missus booked us out a nice little dinner, so I'm going to go enjoy that. Free. Can't beat that. We'll see how it works. $200 too. Nice. I don't know how expensive the place is, but we're going to see what happens. Anyways, enjoy the rest of your day. Thanks for watching, hanging out. And most importantly, thanks for joining us here at Jazz Wealth. For those of you that have done that, if you have not, or you are just curious, you can schedule a call right on the website there, or ask us any questions if you like. Happy to help. We are fully transparent. There's no question you can't ask that we will not answer. And I mean that. All right, enjoy the rest of your day, guys. Thanks for hanging out. See you later.